Welcome. Come on in. Make yourself comfortable. Morning, morning. It's a Friday morning and we are talking about the budget. Yay! I'll give everyone a minute to come in and get comfortable. Hi, everyone. Hi. Today we are breaking down the budget for small business owners. I've got a cup of tea because I'm a little croaky because I've been talking about the budget for 2 days. So I'm a little croaky. So I've got a little cup of tea to keep me going. If you need a cup of tea, feel free to go and get one. This is all part of our partnership with Lloyds Bank Academy, and you can see there's a QR code. You can go and have a look and find out all the stuff that is available. It's all completely free to access. Anyone can access it. You don't have to be a Lloyds customer, and there's loads of stuff from Small Business Britain. So please do go and check it out. Very timely this week. We are talking about the budget. I wonder if many people watched the budget this week. If you did, drop me a line in the chat. Let me know if you watched the budget this week. I was always surprised. We got a bit of a shout out. Small Business Britain got a shout out in the budget this week. And then I was really surprised. My phone just went, I was watching it at a 2-minute delay on the iPlayer. And then my phone just went crazy. People going, you got a shout out in the budget. We did. Small Business Britain did get a shout out, but it surprised me how many people were watching the budget, which seemed to be a bit more than normal. People, I think there's been a lot of discussion and speculation prior to the budget as to what would be in it, that kind of comes to the crux of some of the things that I would want you to think about as a small business. Firstly, never read the headlines. Never read the headlines. Definitely not before the budget, because everyone is speculating, but nobody actually knows what's in it. So if you can, try not to be swayed by the press and the headlines on this one. So the overall message from the budget, some of the things that were discussed in advance were a rise to income tax, and that didn't happen. The general vibe was no big chunky things, quite a lot of little things changing in the budget, and an overall focus on reducing the cost of living. With some bits around the edge, and we'll go through all the different little bits and bobs that are happening and that might impact small businesses. But the general focus is, things like £150 reduction in people's energy bills from April next year, increases to the amount of things like minimum wage. We'll talk about that a little bit. Trying to get people to have a little bit more cash to reduce the cost of living crisis. I think we're in a crisis anymore, but the impact of that, and that would be very welcome for small businesses. So over the last couple of years, when we've talked to businesses about what is causing the biggest challenges for them, and of course, there's been a whole myriad, lots of different things. The cost of living crisis has come up a lot. People have told us about a drop in footfall on the high streets, about a drop in spend. And obviously, a lot of that then kind of filters into B2B businesses as well as direct-to-customer businesses. So we're starting to see that ease up a little bit, and our forecasts for festive spend are really positive this year. We're starting to see customers a little more confident and spending a little more, and hopefully that's going to lead to a Merry Christmas for all of us. I see some hearts going up on the screen. One who's tuned into my webinars before knows I like a heart on the screen. I'm easily swayed. So that was a general vibe going through. I'm interested, just a kind of a first impression for those of you who watched it or have maybe read about it in the papers, what your first impression was of the budget, and then we'll go into a bit of detail and see if that changes over the course of the webinar. So if you want to kind of go into the comments, tell us what did you think? What are your first impressions? I imagine most people didn't read all the notes from the Treasury afterwards, like we did. Oh, Ashley Leeds, they're hitting the small business community. Okay, interesting. Mary, it wasn't as bad as I was expecting. Yeah, Jane, worrying. Okay. What else do we have in our comments? Digesting. Oh, yes. Disappointing. We're talking about retirement. Yeah, we can talk a bit about that. Little help. Dig in the detail. Some things aren't as bad. as bad as they initially sound. I would say that's quite a bit of a trend, actually. When you look into the detail, things aren't as bad. The biz rates that will people benefit from, yes, we're going to talk a little bit about that one. Not as bad as expecting. Shocking, wonder if it can get any worse. And hopefully we can change your mind on that one. Retail, leisure, hospitality, yeah, there was some changes to business rates on that we're going to dig into. Okay, right. So let's dig into some of the detail. The challenge is always with this stuff is that if you read in the headlines, can be quite political, and it can and actually often the time we find that the nuance for small business doesn't always come out in those headlines. It can be, if there's a business conversation, it might be relating to big business, and there's often carve-outs for small businesses. So let's talk about some of the specific measures that are coming through. And I'm going to start with one that we've heard, lots about from small businesses, particularly, I would say, kind of micro businesses or sole traders who pay themselves by dividend. So first one is dividend tax increase. So that is going up from by 2%. So the basic rate of dividend tax is now 10.75%, and the higher rate is 35.75%. Now, if you don't pay yourself by dividends, it's not going to impact you. And interestingly, we have seen a shift over the last few years, actually, with the government very much trying to sort of level the playing field, that whether you pay yourself by POA dividends, that it's not such a big differential. We saw that a bit during COVID, and I'm sure people have recollections of that. Just a reminder, the basic rate band is 12,000. It's ridiculously specific numbers, I would say, as well. 12,571 to 50,270. They kind of really roll off the tongue. Yes, very, very snappy. Less than 12,000 is below the tax band for dividends. And then anything over 50,270 is in the higher rate dividend tax band. I would say the first thing you want to do is have a chat with your accountant on this. This is not coming into effect immediately, so you have a bit of time to plan this. And it might be that you want to if you can, to kind of front load your dividends before the tax rate goes up. So you can do a little bit of planning on that. Definitely have a chat with your accountant. Look at how you are paying yourself as a business owner. Are you paying yourself via PAYE, which case no impact at all? Are you paying yourself via dividends? I think this is less a reflection of the government is not trying to specifically penalize businesses who are paying themselves dividends, but they're trying to kind of create more of a level playing field between PAYE and dividends. We have got a couple of accountants joining us at lunchtime at 12 o'clock. Our second session on this, we're going to have lots of questions coming in, and we can answer those, and we'll bring in a couple of accountants. So please do join that if you've got some more specific questions on that one. I think Emma's going to drop the link to that in the comments, so you can come along and we can maybe dig into some more specifics. So dividend tax increase, that's got a little bit of coverage. Minimum wage increase. We had a minimum wage increase last year, quite a big one, and we're seeing there's a minimum wage increase announced, and this was based on recommendations about really what was kind of fair, what was reasonable. Living wages increased by 4.1% to 12.71, which is 4.7%. That's going to come into effect in April next year. There's also minimum wage increases for young people. So 18 to 20-year-olds has gone up by 8.5% to 10.85. And for 16, 17-year-olds and apprenticeships, it's gone up by about 6% to £8. Now, this is only going to impact you if you have staff on minimum wage. And we know that 70-80% of small businesses don't have staff on minimum wage. We see much more of this in retail and hospitality. Leisure sectors tend to be more hit by this. So if you are in those sectors, it'd be worth speaking to your accountant or bookkeeper and doing a little calculation on how much this will impact you. Now, in our experience, talking to small businesses, there tends to be, firstly, you kind of always expect the minimum wage is going to go up a bit. But there's a general expectation that minimum wage will go up. But also, there's the kind of the flip side. Your staff have to be able to afford to live. That's pretty important as well. But we do know that particularly in those sectors, we have a much more prevalence of staff on minimum wage. So those costs are going up, and that's another cost for small businesses. So you definitely want to start making a bit of a plan and factoring that in from April next year. On the subject of hiring people, apprenticeships. So this was one that we got a shout out actually, but this was one that the government is part of the kind of the big plan to get young people into work, and particularly because we do have a bit of a challenge. There's a high number of young people, and they call them NEETs, not employed and not in education or training. So funding for apprenticeships. So government will be fully funding apprenticeships for SMEs under 25s. So the details of this are coming out, but essentially the idea is that if you as a small business hire an apprentice that is under 25, the government will fund that. So that's pretty cool. We think that's pretty cool. We're pretty pleased about that one. Particularly, we're talking to people about how are we going to bring more young people into your business? How do keeping the costs low to do that? And also I see Lauren saying, I'd love to hire an under 25 and help develop them. Absolutely. And small businesses are so awesome at that. And also we sometimes find, young people bringing in different skills, particularly digital skills, technical skills that might be helpful. When can we do this, please? Apprentice under 25. So this is all getting announced, I think from the new year, this is all happening. So we're going to be doing quite a lot on this. So stay tuned. We would love to see more small businesses hiring apprentices. And it's an interesting one. We've actually struggled over the last few years to get small businesses to talk to us about apprenticeships. And it tends to be, or isn't that something for plumbers or electricians or, those kind of classic apprenticeship sectors. And actually, you can do an apprenticeship in almost anything now. You can do a digital skills apprenticeship. You can do a marketing apprenticeship. And it's a great way if you've got young people who have left education to get them they can get additional skills. You as a business can bring additional skills in. It doesn't have to cost you very much money. So this is very much a conversation that we'd like to have more of. And I think a really positive thing to come out of this. The Chancellor has done a couple of speeches now about young people and how they want to create guarantees for young people to get into work or get into training. And this is part of that process. And I love that small businesses are being involved. So I would say stay tuned on that one. I think that's a pretty interesting, exciting one. So there's a few kind of bits and bobs kind of scattered around in the notes that be interesting, maybe, a bit niche for this audience. Global talent is one. So, for example, international students can move into entrepreneurship through the Innovator Founder route. And that's part of trying to encourage people to see entrepreneurship as a route into work. That was quite interesting. A big one. Let's talk about a big one. Business rates. It's kind of a mixed picture on business rates, but wanted to have a bit of a chat about this one. And I think there's a little bit of confusion out there as well. So one thing to say is there is currently a big review going on in business rates. This was part of the Labour manifesto, and I think we will see a lot more on this over the coming years. I think there was a solid understanding and acceptance that business rates are not kind of working, are not fit for purpose, and are quite a big drain, particularly on high street businesses. So number one, from April 2026. And this wasn't in the budget. This is really just as background. Rates will largely increase due to property price adjustments. Not all rates, but broadly across the board, because of the adjustments relative to property prices, rates are going to go up. So they've put together a £4.3 billion package. I don't know how they work out the big numbers, but to support businesses during this transition. So from April, a new permanently lower multiplier for retail, hospitality and leisure. These are for properties less than 500,000. So it's kind of focused at the smaller end, will benefit from a lower multiplier. So it's about 750,000 businesses are going to benefit, specifically in retail, hospitality and leisure. If you are interested or concerned, I suggest you speak to your local council about how this is going to impact you. We will put some more information out on business rates. So one of the things is it's a tricky one, that we know that some business rates are going to go up from April, and you might see, well, it's gone up, then it's come down because the multiplier's gone down. So actually, is it actually making that much difference? I would say overall, this is not the end game for business rates. There is still a lot of discussion going on, and the review of business rates, and Labour's made it quite a big piece of their manifesto to overhaul business rates. There's a lot of discussion about how big tech internet giants should take more of the load, or big out-of-town warehouses should take more of the load. Lots of things that are being discussed. But there is a strong understanding that small businesses, particularly, sort of town centre small businesses or businesses on the high street, are taking quite a big load. And it's often what we call a sort of tax before you even make any money, because you have to pay it regardless if anyone comes in the door. So on the business rates, I would say it's not a disaster if you're retail, hospitality and leisure. It's a step in the process for sure. I would speak to a council, find out how it's going to impact you and your property. And this is really if you have a rateable property that's that's kind of below $500,000. Salary sacrifice. Talk a bit about salary sacrifice. Not directly small businesses, but may impact you as a business. So this is a little controversial. Not specifically a business thing, but more about an individual. But small businesses, there's often a fine line. So broadly, if you put more of your salary into a pension, this is not your employer contributions, this is your employee contributions, you can save income tax and national insurance on the amount that you put into your pension. Now, going forward, if you put more than £2,000 a year in that salary sacrifice piece, you will pay national insurance the same as you do on your salary. You're still saving the income tax, but you will pay national insurance on it. You will pay employer and employee national insurance. So this is really going to hit you more if you are sacrificing more of your salary each year, and it's not going to impact at all what your employer puts into your pension. So this is one of the measures that they put in place to raise income, which is kind of a little sort of marginal on the sides, a little bit. If you are currently paying yourself via your business pension, your employer puts in a certain amount, you put in a bit. It's less. You put in less than £2,000. Your employer puts in whatever it puts in. It's not really going to impact you. It will impact you a little bit on the amount that you're paying into your pension over the £2,000, but only the national insurance piece, not income tax piece. Hopefully that makes sense. Again, if you're not clear, it's worth kind of doing a little thumbs up there. It's worth doing a little calculation. And if you have a personal accountant, or even speak to your business accountant and get them to do a little calculation for you. Does national insurance class as a tax? National insurance is a tax. It is, effectively is a tax. It's not income tax. It is national insurance. I'm just reading one of the comments. There's a lot of discussion there has been over the last few years is why do we have a separate income tax and national insurance? Surely it all goes into the same pot. Why do we not have one? And isn't this a bit confusing? Yes, to be fair, it is. But this is the way it is. This is where it's structured at the moment. There's income tax, there's employee national insurance, and there's employer national insurance. Now, last year's budget, when we did this session last year, one of the big conversations that we had was around the increase to employer national insurance. So this wasn't hitting the employee. They still paid the same amount of tax, but the employer was paying additional tax over and above. There was a little bit of confusion around it, and that's been interesting over the course of this year when it came in April, because what they did as well was increase the employment allowance, which meant that the first £10,000 a year that you pay of national insurance, you get a rebate on. So for the 1 million smallest businesses, they actually got taken out of paying any national insurance at all. So that employment allowance really was put in to protect the smallest of businesses. And everyone gets that. Everyone gets the 10 grand back. But obviously, as you get bigger, then you're going to go over that, and then you're going to start paying employers national insurance each year. So there was quite a lot of pushback on that. And one of the things the government said in the run up to this budget was an acknowledgement that a lot of the load of tax last year went on to businesses, particularly those kind of bigger small businesses, medium sized and large businesses. And this time round, they wanted to make sure it was a bit more evenly spread and wasn't about being on small businesses. So in terms of sort of small business taxes, there was no increases to corporation tax. There was no increases to employer national insurance other than the salary sacrifice bit when it comes to pensions. So they kind of sort of did what they said they would do. And in that kind of balancing the load thing. Any questions you have on employers' national insurance, we can do those at lunchtime as well. Obviously, that came in April this year. Right, there's a couple of other bits and bobs which are sort of around the edges, but wanted to mention as they do relate to small businesses. One is UK listings relief. I mean, this is this is when you get bigger and you want to list, and I'm not sure that this is particularly relevant to this small business audience, but it is targeted at SMEs. So when you get stamp duty for the first 3 years when you list in the UK. So if you are scaling and that's an option for you, the idea is to give you a little bit of relief at that point. There's a little bit on tax admin. So I'm sure a lot of you are aware Making Tax Digital is coming into place next year, next April. That's still going to be happening for sure. Then that's been in plan for a while, and hopefully, if you have not yet, then please do have a think about getting onto one of these automated platforms where there are lots available, Xero, QuickBooks, Sage, etc. And a lot of them have freemium models, because once you are, then that makes it so much easier for you to then file your taxes. There's been a little bit of a shift. There's some small groups that are having their start date for Making Tax Digital pushed back to April 2027, and we'll share information on who that is. But it's definitely worth checking with your bookkeeper or accountant whether that is you, and that date might be pushed back a year. But I would say generally it's pretty good. It's going to save you loads of time anyway if you can get yourself sorted on an online platform. These things will literally suck in your bank statements. You can just pop in all your receipts and invoices. It's going to save you time anyway. And then it all means it's all in there. So when Making Tax Digital comes in, you just pressing a button. Makes life a lot easier for you. So it's worth doing it now anyway, even if you are in one of the groups that's been pushed back to April 2027. There's been quite a lot of press around because it was one of the things, particularly around investment for businesses, the first year allowance. So there is a new 40% first year allowance. Does anyone know what that means? So I'm going to talk you through it with a tiny example very quickly, just to explain what this is, because the idea is that it may be able to save you, reduce your tax burden if you are investing. And this is because the government would quite like you to invest in capital expenditure. So by capital expenditure, we mean things like equipment, machinery, business assets, that kind of thing. Right. My mouth's full of tea. So when you buy something like that, the cost doesn't always get deducted from your profits all at once for tax purposes. So there's a thing called capital allowances. So you can gradually write off the cost of those assets against your taxable profits. So effectively, it reduces your profits, reduces the amounts that you're taxed on. So one of the main types of capital allowances is called writing down allowance, or WDA. There's lots of acronyms in this world, not particularly helpful. So this means that you deduct a fixed percentage of the remaining pool of your assets each year. So you bought a bunch of stuff, a bunch of equipment, a bunch of, maybe a car, some laptops, a bunch of stuff. Depending on what you're doing, a crane, what does your business do? Another option where it's available is something called a first year allowance, which allows a larger portion and sometimes a significant part of the asset to be deducted in the first year. So this means that you could actually reduce your tax a bit in the first year that you buy that piece of equipment. So 2 things that were announced in the budget. One goes one way, one goes the other. The WDA, so the main rate, it has gone from 18% to 14%. So this means that you can, instead of being able to deduct 18% of the remaining value of your main pool of assets, you can deduct, this is from April next year, you can deduct 14%. So that's actually reducing the amount that you can reduce your profits, the amount that you reduce your profits in order to reduce your tax. However, on top of that, or alongside that, they've introduced this new 40% first year allowance for qualifying main rate assets. So this is from January, not from April, but from January 2026. In the first year of purchase, you can immediately deduct 40% of the asset cost, so long as it qualifies. There's a few conditions, but instead of waiting to claim the deductions through WDA. So in that first year, you can actually get a bit of a tax advantage. This is designed to aim businesses to invest in new equipment by giving more upfront tax relief. So what does it mean sort of practically? That if you use WDA, you'll get tax relief more slowly because it's gone from 18 to 4%. If you buy new eligible assets after January, you can get this one-off 40% tax deduction. It's trying to encourage businesses to invest. So give you a bit of an example, because it's quite hard to understand in a sort of theoretical way. So if you buy 100 grand's worth of new equipment, corporation tax hasn't changed, by the way. Main rate of tax, 25%, that hasn't changed. So it's assuming they're not fully expensing it, it's going through it as an expense as you buy it. And the old rate, you can deduct 18% of the remaining value. So over 4 years, you're saving around 13,750 in tax by putting that through at 18%. Because that's dropped to 14%, assuming you've got profits that you can charge this against. So after 14%, after 4 years, you've maybe saved about 11,250. So that's 2.5 grand tax less that you saved because that WGO has dropped down. However, you add in the new 40% first year allowance. That first year, you're actually reducing your tax quite a lot. So over the 4 years, you're now saving 15,450. So the two together actually means if you're investing in capital assets, you will save money on your tax. I really hope that made sense. I know it was a kind of a slightly complicated example, but the idea is that if you are, the government wants you to invest in assets for your business, and they're going to give you a bit of a tax break, particularly in year 1, for doing that. Hopefully that all made a bit of sense. So broadly, those are the kind of main things that are going to impact small businesses. There were some other bits and bobs kicking around in the budget, and particularly the focus was on how do we end the sort of cost of living crisis. Things like raising the minimum wage is a big part of that. The energy bills. So from April next year, the average energy bill is going to come down by £150. So I think that's probably good news. Energy bills has been a real thing that's particularly since the war broke out in Ukraine. That has been a thing that we've heard a lot, has been really problematic. The goal is to get people, to get consumers feeling more confident and spending more. And then that just kind of starts to kind of have a domino effect through sectors, particularly businesses on the high street or direct-to-consumer businesses, not on the high street, might be on the internet. The footfall or the sort of fingerfall we want to see increasing. Now, we've had some really positive signs in the last few months that this is happening. Talking to a lot of big companies who've said they've seen consumers starting to spend more already. Our forecast for festive spend this Christmas, we've got Small Business Saturday, which is a week tomorrow. Don't spend on Good Friday. Black Friday today. Don't spend on Black Friday. Wait for Small Business Saturday. Our festive spend forecast suggests about a 19% increase in spend at small businesses this festive season. which is really up. Part of that is driven by generally an increase in festive spend this year. We're seeing a lot more confidence from consumers from last year, but also a slight shift from big business to small business, which again is really encouraging and very much part of our goals to get people to consider small businesses and be conscious about where that money goes to. And one of the things that is, I think, encouraging is that we are talking about small businesses more. When we talk about the budget, we talk about how it impacts small businesses. The government talks about how it impacts small businesses. And often we do see carve-outs for those smallest businesses, like we did with the national insurance last year. So I think that feeds into the national conversation. And that then means that when people are thinking about, I'm going out, I'm going to buy my Christmas presents, I'm going to get the turkey, I've got to plan something for next year, they do think about where that money is going. We're feeling pretty confident and optimistic at Small Business Britain. There are no overnight fixes, and there's certainly no overnight fixes in the budget for sure. I would say overall there's no disasters in the budget either. We certainly don't have any shockers like last year, and the big employers' national insurance, which was a big jump last year, and there was a much bigger jump in minimum wage last year as well. I think that there are small things here and there. Some of the pushback that we've heard is, was there enough in the budget to help small businesses? Was there enough? I mean, we can always argue that we want more. We can absolutely always argue that we want more. What we are starting to see, though, is more stability, more consistency. The thing that I would stress, though, is try not to read the headlines. Try to look at the fundamentals, and particularly look at the fundamentals for your business, because what might apply to someone else's business may not apply to you. This is why it's really important to sit down with your bookkeeper and accountant and have a conversation about you and your business and what you're doing. And that's going to mean things like, how exposed are we to rises in minimum wage, and what impact is that going to have? Do we have staff that are doing salary sacrifice into their pensions? Do I pay myself via dividends or via PAYE? Could we use some of that first year expensing 40%, and could we benefit from that? So there's quite a lot of things that's worth sitting down and having a chat with your accountant about how it impacts you. There's no kind of big sweeping changes, and none of the headline rates of tax have changed. So, for example, corporation tax hasn't changed, VAT hasn't changed, income tax hasn't changed, national insurance hasn't changed. So we're kind of around the edges a little bit. It's going to impact people differently. The thing really is, what you want to do is put yourself in a situation where you feel confident that you know what is going on with your business, because that's going to make you feel more happy and more comfortable making decisions and planning for next year. We are going to be taking lots of questions with a couple of our very great accounting friends who are joining us at 12 o'clock today. So Emma's going to put the link in the chat for you to join that. And if you want to go away, have a bit of a think, come back with some questions in a couple of hours, you're very welcome to. If you haven't signed up already, you're really welcome to come back. We do know that there's often not a simple answer to a lot of these questions, because a lot of the time the answer is, well, it depends. And that's not helpful to anyone, is it? It does depend. So why not come along and ask the specific questions about your business, and we'll see what we can do to help you to navigate through this. For this point on, I would say, try not to panic. Firstly, none of these changes are happening overnight. Literally nothing is different now to when it was on Wednesday. You have lots of time to plan. There are lots of good things, lots of strong indicators that things are picking up in the economy, that things are picking up for small businesses. One of the things that we've heard a lot actually is the mortgage change. So the mortgage change, bear with me. 2 years ago, we had the Liz Truss budget. So I like to call the Liz Truss peak. And I'm sure we can all remember, anyone with a mortgage will absolutely remember, the interest rates went from 0 to 5%. And it was a real shocker for anyone that was either on a floating rate or had to remortgage. What we're now seeing is all those mortgages with 2-year fixed periods are all getting remortgaged. And people are now having positive, pleasant news about their mortgages rather than the unpleasant news. we're hearing often, like, people are saying we're saving £500 a month, £700 a month, even £1,000 a month, because the difference in because those interest rates have come down, it's actually putting quite a lot more money in people's pockets. This is obviously just if you have a mortgage, but we're also seeing that impact in the rental market too. Oh, excuse me. Why is that good news? It's more money in people's pockets in time for Christmas. It's more money in the high streets. It's more consumer spend. That then kind of trickles up the supply chain to most sectors. This is really encouraging. Oh, I slowly die. That time of year, excuse me. So, some positive news. Things are encouraging. Things are not going to change overnight, but they are gradually getting a little bit better. And I think that's good news. Come back and join us at 12 o'clock. If you have some webinar feedback, please do share it. There's a QR code on the screen now, and you can again come and visit our website. But I would really encourage you, if you can, to join us at 12. Come and ask your specific questions. I'm seeing some of the comments in about, can we do a session on pensions? Absolutely, we can absolutely do a session on pensions, and would love to do that. Please always get in touch. Please don't die. I'm not going to die. Just, cough and cold season, babes. We can answer some of these questions. I see someone is saying about the change to the VAT threshold. No mention to that in the budget either. If there's anything that you would like to know about, please do get in touch with us. We run so many of these sessions, and we always want to hear from you about what's going to be helpful for you and your business. We can recap on the key points from today. If there's anything that you need, this is recorded. You can come back, you can watch it at any time. But please do get in touch with us with any questions. Hopefully that's reassured you a little. I remember thinking back to those comments in the chat right at the beginning. Everything's terrible. Not everyone was saying that, but it really isn't terrible. It really isn't awful. It certainly hasn't hit small businesses, this budget. We absolutely will do a session on apprenticeships very soon, so please do stay tuned. See you all a bit later, hopefully. Go and get a cup of tea. I'll see you soon. Thanks a lot.